Stocks are little changed amid trade negotiations in China and the Fed's move to lower rates. Joining me is Jonathan Corpina to talk the markets. Hey, Jonathan, thanks for joining me on this Tuesday. Stocks are little changed. Hey, what's new? They kind of been like that all summer. Trump has a major team in China do some wheeling and dealing. What do you think who is the most important person on his cabinet right now? Because apparently Lighthizer is the talk of the town.
I would probably go with that, but I think Mnuchin also is clearly somebody who's going to be pulling a lot of strings at this point. Shift that over. We're looking at Powell and the Fed and what they're going to do and what they're going to say. So clearly a lot going on in Washington that's going to affect our markets and our economy.
What do you think about the Fed supposedly lowering rates the first time in 10 years?
Yeah, I think if the Fed sticks with their plan of what they've said and how they're going to do things, then this would be very appropriate to cut rates by a quarter point. I think it'll catch the market somewhat off guard if they go a half a point. I think everyone's pricing in a quarter point at this time. But yes, our economy overall has gotten better. Job numbers have gotten better. I think sentiment has clearly gotten better. And what we're seeing right now, this uncertainty of what's happening with China and tariffs, puts us in a position where the Fed probably can't use or shouldn't use all their bullets at one point. They should probably kind of step back and kind of walk this down.
I keep having this Freudian slip that they're hiking rates in the past few weeks with my interviews. Why do they have to do anything at all?
I think they could take the stance of we're not going to do anything at all because there's just so much uncertainty going on. But I think that somewhat would deviate away from what their plan is and what their script is. And we continually talk about what they say and how they orchestrate what they're going to do. So the market doesn't like when they deviate too much off of that. And they've probably put themselves in a position where even if they don't think they should cut rates, they probably have to, just because of the body language, the tone, and the verbiage we've seen before.
We're going to talk some major smack. Jonathan, what do you think about the 13 billion trillion bonds with negative interest rates globally?
Yeah, I think the fluctuation that we've seen there and the shifting from asset classes clearly just shows me and tells me that investors really aren't comfortable with what's happening on right now, what's happening in our domestic and global economy. Every time we feel comfortable as to where we think we're going to be, I think a couple of tweets come out of Washington, and that shifts the rhetoric a little bit. So I think right now the uncertainty that's there, and we're seeing it in many different asset classes, whether it's equity, whether it's fixed income, we're seeing it in currencies. That type of uncertainty is something that we're going to continue to watch.
And have you made any portfolio adjustments in contingent with that?
Not yet, right? Because if you would have made portfolio adjustments when we started talking about interest rate hikes or declines and 10-year yields and curves, we would have made some pretty big portfolio moves 6 months, 9 months, a year ago. So I think waiting this out, which is something that we've continually talked about, has been the right course of action, just because this thing can change at any given point, right? We're going into this big meeting next week. President Trump says we're either going to come out with a great deal or no deal at all. Okay, yes, I think that's what we're all betting on, is either a great deal or no deal at all. I would think that investors are probably betting on no deal at all. And if you're betting on no deal at all, you have to just wait this out.
Well, you've said it all along, Jonathan. Thanks for joining me today. Hey, we're starting a new month. Anything on your docket?
I think it's very contingent on what comes out of Washington and the Fed and what happens with the China talks. August should be a quiet, slow month. As the summer is winding down and investors are getting ready to gear up for the next quarter. But anything that can happen this week of those two pivotal points is something that we're going to watch. I would think if you want to fast forward a little bit, back to school time of year, I can't believe I'm saying that, but retail sector is one that always kind of gets that boost from there come the second, third week of August.